morning. How are you doing today? Good morning. Can you hear me? Can you hear me? Can you hear me? If you can hear me, drop your comments. How are you doing today? How has been trading? Hope it's been profitable. I have, I think, three active trades now, and two are in profits. Two are in profits. I'm selling Australian dollar USD, selling, buying, no, selling. Am I buying GBP JPY? Yeah, I'm buying GBP JPY. Okay, Euro Aussie, buying Euro Aussie too. So it's only Euro Aussie is on the negative now. Okay, Australian dollar USD is positive. Um, Euro Aussie is negative. GJ is positive. If you have any pair you want us to analyze together, please drop it in the comment section. Okay, so let's start with um, gold. Let's start with gold. So Raphael, are you on the stream now?
Yes.
Okay, let's start with gold. Gold is still bearish. Let me delete all these lines. Gold is still bearish. Okay, let's see how yesterday candle closed. Okay, you can see gold is bearish. Okay, you can see our Monday candlestick closed as a spinning top. I believe you can see that, right? Yeah, Monday closed as a spinning top, and yesterday candle closed as an engulfing candle. That tells me that we have more sellers in the market, and there's a high probability for price to drop. Remember, trading is all about probabilities, okay? So there's a high probability that price will drop, okay? But I would advise that you wait for a candle. If you have not executed a sell trade, okay, wait for a candle to close below the low of this bullish candle that looks like a spinning top. I think that was Thursday candlestick, okay? Wait for a candle to close below the low of this candle, because after the formation of this engulfing candle, a fair value gap, I believe a fair value gap was created, and it is possible for price to pull back to fill that fair value gap. Let's go to 4 hour. So on 4 hour, you can see we had a fair value gap here on 4 hour. So it is possible for price to pull back to fill this fair value gap before it continues with its bearish move. Okay, so since we know that there's possibility for price to pull back to this gap, our stop loss, if we decide to sell now, or if we wait for price to break, you can see a support was formed at this point. A support was formed at this point. So we need to ensure that this support is broken. If this support is broken, that's a confirmation that supply has exceeded demand. And when supply exceeds demand, price is expected to drop. So wait for a candle, could be 1 hour candle, 15 minutes candle, to close below this low. And since we know that there's a possibility for price to pull back and fill this gap, our stop loss must be above this gap. Our stop loss must be above this gap. So if we are taking a sell below this level, which is 2155.1, and our stop loss, we set it at 21739, I think that's about 100 and something pips. Okay, that's about 200 and something pips. And if that risk is too high, if you are not comfortable with that risk, please don't execute gold. Don't execute sell for gold if you cannot accommodate the risk of 100 and something pips. Personally, I don't want to take that kind of risk. Okay, I don't want to take that kind of risk. So patiently wait for price low, then set your stop loss at this level, or wait for price to pull back and fill this gap, okay, before you sell. That is what is likely going to play out on gold. Price is likely going to pull back, fill this gap, or break these supports and just keep dropping. I hope that is clear. Good morning, Mr. Isaac. I hope that is clear. So if there's any pair you want to analyze together, drop it in the comments section. Okay, let's move to the next pair. That would be Australian dollar USD. Okay, so I have a trade on Australian dollar USD. This is a bearish setup. Australian dollar USD is bearish. Let's start with the daily time frame. So you can see how yesterday candle closed. This is a spinning top, and before the formation of this spinning top, yesterday candle we had uh, an hanging man, okay, and before the formation of this hanging man, we had a shooting star, okay. This tells us that the sellers are showing up, the bears are showing up in the market, and there's a high probability for price to drop. But right now, price is trading below the low of this shooting star, okay. The market is trading below the low of this shooting star. To me, it means that the bears have overpowered the sellers. It means that supply is more than demand, okay, for them to be able to close, push price below the low of this candle. So what we have on Australian dollar USD right now is a bearish setup. You cannot buy, if you buy Australian dollar USD at the current market price, is at a very high risk. Okay, so it's a sell on Australian USD, and if you are selling Australian dollar USD from the current market price, you can see where I have my stop loss. Okay, I should have adjusted my stop loss to this level. Okay, I should have adjusted my stop loss there, but as you can see, the market has not really gone in my direction. Okay, I think less than maybe 2 or 3 pips or 4 pips. So immediately the market moves in my direction. Let's say if it gets to this low, that's when I will adjust my stop loss. Okay, considering the fact that we're expecting by I think 3 p.m. today, I wouldn't just adjust my stop loss from this point to this point, because it is possible they might want to hunt for stop losses at this high. Okay, but if price push down and close below the low of this strong bullish candle, then I would adjust my stop loss from this point to this point, and I might consider adding more trades. Okay, I might consider adding more trades, because if price successfully breaks out from this level, the next target will be at this level. Okay, the next target will be this level, because we have liquidity, we have stop losses at this level. So if they successfully break out from this low, I would adjust my stop loss to this level, and probably I would add more trades. Okay, I will execute more trades on Australian dollar USD. So that's my on Australian dollar USD. It is bearish at the moment. It is bearish at the moment. Yeah, welcome, Mr. Kayode. I hope that is clear. If you have any pain you want us to analyze, please let me know. Let me know. Euro Aussie. Okay, I have a trade on Euro Aussie. Euro Aussie has been playing with my emotions since I think it was on Monday I executed this trade. It was on Monday I executed this trade, and it's been moving up, down, up, down, up, down. You can see, I think it almost hit my stop loss yesterday. Few pips to my stop loss. You can see it yesterday. Less than 4 5 pips to my stop loss. But thank God they could not, they didn't get my stop loss. Okay, so it is still bullish. Still bullish. You can see price has been in a range from this point. It has been in a range. You can see after price tested this resistance, which became a support, you can see Euro Australian dollar has been in a range. So what we're waiting for is a breakout. What we are waiting for is a breakout. So if you've not executed a buy trade on Euro or C, you can patiently wait for price to break the high of this range, this resistance. You execute a buy. If you have not executed a buy trade, patiently wait for a candle to close above this level before you buy. Immediately a candle closes above this level, I would adjust my stop loss to maybe few pips below this level. But right now, I'm still going to leave my stop loss at this level until this high is cleared. That's when I'll move my stop loss to this level, and I might probably add more trades. Okay, I would execute more trades. Now, when you are attacking trades or when you are adding to your trade, you must ensure that the risk on the trade does not exceed what you have determined you would lose on that trade. Are you with me? For example, if you're trading with $1,000 and you have determined that the risk you will take on every trade is $20. Okay, so on Euro Aussie, let's say the risk I've decided to take is $20. I'm stacking. By the time I add up the losses, it must not exceed $20. That is where many people get it wrong. they don't do the calculations. They just keep adding trades. And before you know it, if the market pulls back a little bit, they will lose the profit they've made on the first trade and even go on negative. Do you get it? So everything in trading has to be strategic. It has to be planned. You don't just open new trade because you feel like opening new trade because you are excited that the market is going in your direction. No, it has to be planned. I have everything planned. Okay, so I'm not just going to add more trades because the market is moving in the direction. No, I have it planned. At this point, I'm going to add more trades. Okay, and if I'm adding more trades, I have to reduce the risk on the first trade that I executed. I hope you get that. Everything must be planned, everything must be strategic, it must be logical. Okay, so that is it on Euro Aussie. If you don't have a trade on Euro Aussie, you could patiently wait. But let's go down to 4 hour, let's go to lower time frame to see if one can even risk. And the reason you should be more concerned about breakout from the high of the range is that the trend on a higher time frame is bullish. Okay, the trend on the higher time frame is bullish. That is why your focus or your concern should be on breakout from the high of the range. Breakout for me, if price breaks out from the low of the range, I will see that as a false out. I will see that as maybe clear on liquidity. Do you get it? That will be a false breakout because the trend on the higher time frame is bullish. So what I should be focused on, or what should be my concern, is breakout from the resistance or the high of the range. I hope you get that. I hope you get that. So let's go to lower time frame. Let's see the pattern we have on lower time frame. Let's see if one can even take the risk and start buying at the current market price. It's possible. When you go down to 1 hour 50 minute time frame, you could find pattern that has, confirm that the trend is about to fly. So let's go to 1 hour. So you can see on 1 hour, the pattern we have here indicating that there's a high probability for price to go up because we have inverted armor here, formation of this bearish candle, and you can see this bullish candle closed above the high of this bearish candle, and I think this one also closed, or let's see, did it close above it? Okay, it didn't close above the high of this. Okay, so let's see what's playing out now. So after the formation of this candle, okay, after the formation of this candle, let's go down to 15 minutes. I think a fair value gap was created on lower time frame after the formation of this bullish candle. I believe a fair value gap was created, and that's the reason price is trying to pull back to fill that gap. So let's go to 15 minutes. So you can see on 15 minutes, okay, we had a fair value gap here. Can you see that gap? The gap in between the high of this bearish candle and the low of this bullish candle. That is the fair value. And as you can see, that fair value gap has been filled, right? You can see that's the reason price pulled back at this point. The gap, this gap here got filled. Okay, so now let's go to 5 minutes after this breakout here. Okay, after this breakout from resistance here, this candle that out from this resistance, I believe there's a fair value gap that was created on 5 minutes or 1 minute. So let's go down to 5 minutes. So you can on 5 minutes, can you see the fair value gap that was created? This is the fair value gap. The gap in between the high of this bearish candle and the low of this bullish candle. That's the fair value gap. Can you see that? So I believe it's the reason price is pulling back. Okay, it's the reason for that pullback. Can you see that? So once this gap gets filled, there's a high probability for Euro Aussie to start going up. There's a high probability for price to start going up. Okay, there's a high probability for price to start going up. Okay, so if you decide to buy Euro Aussie from the current market price now, so we've identified two fair value gaps. So if you want to buy Euro Aussie, you must ensure that your stop loss is below those fair value gaps, because we know that there is a high probability that price is likely going to pull back to fill those gaps before it continues with its bullish movement. Okay, so you want to ensure that your stop loss is below those fair value gaps. Okay, you want to ensure that your stop loss is below those fair value gaps. You don't just set your stop loss at any level. They can easily hunt for those levels. Set it below the fair value gaps. I hope that is clear. So if you are going to buy, your stop loss on euro dollar should be, I would suggest 20 pips below the low of this candle. 20 pips below the low of this candle. Anything that makes the market hit your stop loss, forget about euro for that day. Forget about euro Aussie for the day, okay? If your stop loss gets hit, just forget about euro Aussie. So before you execute a trade, you look at the what should be bearish, okay? Euro USD should be bearish. Let's start with the daily time frame. So you can see the candlestick pattern we have on the daily. Last week we had a spinning top, a bearish spinning top. You can see all the patterns that has been forming. They've been bearish reversal patterns, right? These are bearish reversal patterns, okay, on the daily time frame. So we should expect a bearish move on Euro USD. Okay, that's my expectation on Euro USD. So price tested last week, price tested resistance level. Okay, see resistance, tested this resistance level. That was the reason for the rejection. You can see that. That's the reason for the pullback, for the rejection. Okay, so let's go down to lower time frame. The daily is bearish. Let's just see the weekly. Let's see the pattern. Okay, last week candle tested a resistance level, strong rejection. You can see the resistance level clearly on the weekly time frame. You can see this resistance is the reason for the rejection. You had resistance here also. That was the rejection we saw last week. We go down to a lower time frame. We'll see the pattern on daily. You see the pattern on daily. Can you guys hear me? I hope you guys can hear me. Can you guys hear me? Can you hear me? Can you hear me? Mr. Raphael, can you hear me? Is the chat moving? The chat is moving, okay. Okay. So, okay, it's bearish. So let's go down to 4-hour time frame. 4-hour time frame, okay. So let's see what we have on 4-hour time frame. Let's see what we have on 4-hour time frame. Morning. Let's see what we have on 4-hour time frame. So on 4-hour we have this low. You can see on 4-hour we have this low, the low of this bullish candle. You can see the low of this bullish candle, and as you can see, the market is trading below the low of this candle. That tells me there is more supply than demand. Okay, this tells me we have sellers in the market, okay, than buyers, in as much this candle closed below. Okay, so this pullback we saw, I think, was to fill a fair value gap. Let's down to lower time frame. I think that pullback was to fill a fair value gap on lower time frame. After the breakout, let's identify the fair value gap. Let's go to 1 hour. So can you see that on 1 hour? That breakout created a fair value gap. Can you see why price had to pull back? Can you see this fair value gap? Can you see? Price pulled back and filled this gap. Can you see the gap that was created after the breakout? You can see that. So that's the reason price pulled back, and that gap has been filled. So one can risk selling Euro USD. If you are risking selling Euro USD, let me see. If you're risking selling Euro because of the major news that will be released later, I would have said you should set your stop loss, use the high of this candle, but that would be very risky because of the major news. Okay, because of the major news. So if you're selling Euro USD from the current market price, your stop loss, let's see, the price is currently at 1.0922. Set your stop loss at 1.0980. This would have been the best level, okay, but the risk is too high, about 60 pips. Okay, so you can set your stop loss at this level, okay, or at this level. Okay, you can set your stop loss at this level, because if able to push price up to this level, there's a high probability they will also hunt for this level. So you can set your stop loss at this level, and your first TP will be at this level. That will be the next area of liquidity. Okay, so that's my take on Euro USD. I hope that is clear. If you have any question, please let me know. Please let me know. If you have any question, let me know. Are there any comments there, Mr. Raphael? Please let me confirm. This my other screen is off. If there's any comment, any pair they mentioned that I should analyze, let me know.
There's no comment.
No comment. Are you sure?
Look at one that's been missed.
Please, if there's any comments, let me know. Because this screen is off. I don't know if it's network. Let me know. Okay, so that's my take on Euro USD. Let me see what's happening on 1 hour. Okay, so that's it on Euro USD. Euro USD is bearish at the moment. Euro USD is bearish at the moment. GU also should be bearish. I think we've analyzed GU because the news that was released today for GU didn't favor GU. I think it was neutral. I think the actual and the forecast is the same thing. Actual and forecast is the same thing. So I don't think that will give on GU much strength. Okay, I don't think that will give GU much strength. Okay, so I think I need to restart the system. Please let me know if there's any comments. Let me know. Okay, let's move to the next page. I hope you guys can hear me. Can you hear me? Can you hear me? Can you hear me? I hope you can hear me. Okay, let's move to the next page. Euro JPY. Euro JPY is bullish. Okay, let's look at GBP USD. So GBP USD, let's start with the daily. Oh, you can see GBP USD. Can you see? It's trading below the low of this candle. That is a bearish setup. You can see we had a spinning top here. The next candle had closed bearish. Okay, so and this candle that was yesterday candle closed below the low of this bullish candle. That's a strong confirmation. That is a strong confirmation that we have more bears than bulls. It tells us that supply has exceeded demand. Price should drop. Technically, GU is bearish. It is bearish. Okay, so that's my take on GU. Let's just see what's happening on 4 hour. So if you are considering trading GU today, please, it should be a sell. You can see on 4 hour we have a fair value gap. Okay, you see this fair value gap after the breakout. A fair value gap was created here. Can you see that gap? So it is likely you can see price has tested that gap, but it has not filled that gap. So if there is a possibility of price to pull back and fill that gap, then we cannot set our stop loss using this level or this level because we know price is likely going to pull back to fill this gap. So if we want to set our stop loss should be maybe this high or a few pips above this high. Okay, a few pips above this high, or you could even use this level as your stop loss. That's 2854. That risk is high. That's like about 70 pips, which is very high. So you can set it like 20 pips above this level. Okay, the risk should not exceed 50 pips. Okay, take a risk of 50 pips, and that's the major news. If not for the major news, I would have said you should set your stop loss 20 pips above the high of the value gap. But because of the major news that will be released, okay, they might want to push price up to fill this gap. And you can see we also had a gap here. There was a gap here also, and that gap they might also want to hunt for stop losses at these areas. Okay, so that's why you might have to set your stop loss at this level. Okay, this will be the best place to set your stop loss because of this gap, this fair value gap. So your stop loss should be above this level, please. Stop it, okay? You cannot take it from this point. Probably you can adjust it to this level. As price keeps going in your direction, you adjust. Okay? So that's my take on GU. Okay? If you think the risk is too high, what you need to do is reduce your lot size. Okay? Because we might say price will pull back and fill that gap, but price might do otherwise. It might just keep going down. So if you want to miss that move, what I would advise is that you can reduce your lot size. So if the risk you're supposed to take on this trade is $20, you can go in with $10. Okay, you can go in with $10. Then after the news is released, if the market is still going in that direction, you can add more trades. I hope you get that. I hope you get that. I hope get that. Any question? Any question? Any comment?
No, there's no comments.
No comment? Let me see, please. Can you guys hear me? Are they responding? No, not yet. That's not where you're supposed to be looking at. So,
Okay.
can you guys hear me? If you can hear me, which instrument do you want us to analyze? You are not on the. Please, sorry, I need to see you guys comment. Patience, please. You're not on the right page. You're not on the right page. Let me see. Good. Okay, GJ. Okay, okay. Mr. Akin Leye says GJ. Mr. Akin Leye says GJ. I hope people can hear me. What's wrong with your own volume? What's wrong with your own volume? I hope you all can hear me. I hope they can hear me. What's wrong with your volume?
My volume.
Your volume. You
Okay,
get?
because of someone was distracting my attention.
Hello, can you guys hear me?
So I connected to you.
Okay, you connect it. Okay, can you hear me? Put it in your ear. Can you hear me? Can you hear me? Can you hear me?
No, I did not.
Can you hear me? You can hear me. Okay. Okay. Please let me. You can see the comments now. I see GJ. Someone is saying GJ. Okay. So sorry for that break. Okay, you can see the comments now, right?
Yes.
Please, if there's any new comments, let me know. Okay, GJ. Let's look at GJ. So GU is bearish. Let's look at GJ. I dropped on the WhatsApp group that GJ and EJ is bullish. If you're on the WhatsApp group, you got the message on WhatsApp. You can see I have a trade on GJ. So GJ is bullish. GJ is bullish. GJ is bullish. It is bullish. It is bullish. You can see on the daily time frame, a fair value gap was created here. So this is my target on GJ. I want to see price pull back to fill this gap on GJ. That's my target on GJ. You cannot sell GJ unless this support is broken. You can see that's why I have my stop loss at that level. Anything that makes price breaks this support, the trend has changed from bullish to bearish. So I have to exit my trade. That's why I have my stop loss here. Okay, so if we apply Fibonacci on this previous range, you would see that price is at what? Is at discount. So we want to see price pull back to what? You can see this previous range. If you apply your Fibonacci, you would see that price is at what? Can you see? Price is at what? Is at discount. So price needs to pull back to premium before we consider selling. We cannot sell at the current market price. Selling at the current market price is at a very high risk. Is at a very high risk. So you should consider buying now. Okay, and you should consider, if you're considering selling, you should wait for price to come fill this gap, or wait for price to come to premium level before you sell. When price gets to premium, wait for a bearish reversal pattern to form before you sell. Is that difficult? Is that difficult? Patience, please. Patience. Don't be in a rush. Patience. So if you want to still sell, if what you're seeing is sell, wait for price to fill this gap, come to premium before you sell. Okay, that's my take on GJ. Which other pair? Is there any other pair? Which other pair do you want us to look at? Let's look at USD card. USD card. Now, USD card, let's start with the daily time frame. Daily time frame. Okay, so you see how yesterday candle closed? So if GU is bearish, then we should expect a bullish move on USD card. I think guys yesterday that USD is strong at the moment. Okay, USD is bullish at the moment. DXY is bullish at the moment, and if DXY is bullish, we should look for buy. So let's just look at the weekly time frame. let's see the candlestick last week, okay? I see last week candlestick pattern, okay? Strongly bearish, strongly bearish, okay? We had a resistance here, price tested this resistance level and there was a strong rejection from that level, okay? So let's go down to daily, okay? So daily, we have this pattern here on daily. So now you can see what played out here on the daily time frame. Price tested this high, the high of bearish candle. There was a strong rejection from that level. There was a strong rejection at that level. But let's go down to lower time frame, and you can see also that on the daily time frame, price tested a support level. That was the reason for the rejection. Okay, so let's go down to 1 hour time frame. What's happening on 1 hour? Okay, so you can see the structure. If you look at the structure we have on 1 hour, this is a bullish structure. Am I right? This is a bullish structure. This is a bullish structure on 1 hour time frame. This is a bullish structure. So you can see we have liquidity void here. You can see this void here. From this point to this point, it was just sell, sell, sell orders that was executed, right? So this is liquidity void. And also we had a fair value gap here. So there's a probability that price will come and fill this gap, okay? Or it goes bearish. So if you are buying USD card, this should be your first target, these gaps here, this fair value gap. I hope that is clear. I hope that is clear. So long term, USD card is bearish. Long term, GBP USD is bullish. I told you guys on Tuesday or during the weekly session that what we are trading right now is pullback. We are taking advantage of the pullback. Okay, so that pullback may be for this week. Next week, the direction might change. The direction might change next week. Okay, so if you've not bought and you want to risk buying, okay, you could wait for price. I think the reason for this pullback on USD card is this fair value gap that was created. I think that was the reason, okay, for this pullback. And as you can see also, I think liquidity has been cleared. The low of Asian session has been cleared. Okay, this is the first candle. The Asian session started. Okay, I think this was the first candle here for today. This is the first candle. So what they did today, you can see from this point to this point, price was in a range. So what they did this morning was to clear the liquidity because they know a lot of retail traders would have executed buy. You can see we had several bullish reversal pattern that formed here. A lot of retail traders would have executed buy and their stop loss would be at this level or a few pips below this level. So what they did was to clear the liquidity at these lows, and also we had a fair value gap. They have to fill that gap, and that they have achieved. One can execute a buy trade on USD card now. This is good entry on USD card. And if you are buying USD card from the current market price, ensure that you have your stop loss in. Anything can happen in the market. Anything can happen in the market. So you need to set your stop loss. Set your stop loss. So if we buy from this point 1.34 1.3492 1.3492 1.3492 and you're setting your stop loss, let's say 34 at this level, your stop loss should be at least around this level. That's about 60 pips, and that's because of the measure you're expecting. Okay, if there would be no news, I would have said you should set your stop loss around this level, but because of the news, so after the news is released, if it is still moving in our direction, okay, if the news favors US dollar, then you can adjust your stop loss or wait price to break. If a 4-hour candle closes above high, if a 4-hour candle closes above this high, then you now consider buying what's it called, USD card. Adjusting your stop loss to this level, but you need to wait for this high to be cleared before you execute the trade. I hope that is clear. I hope you get that. Any question there? Any question? Any question? No question. I hope that is clear. If you have any question, any pair, please drop it in the comment section. Drop it in the comment section. Drop it in the comment section, please. Which other pair do you want us to analyze? Let's look at New Zealand. I don't need to look at New Zealand USD because it is positively correlated with the Australian dollar USD. Okay? Which other pair do you want us to analyze? Let me know. Okay, let's look at USDJPY. USDJPY is what? Bullish. USDJPY is bullish at the moment.
It's a question here.
Okay, what's the question?
Good. That's yes.
We've looked at gold. We've looked at gold. We've looked at gold. Gold. Mr. Kayode, I hope you were in class when we analyzed gold. Okay, I will revisit gold. Gold is bearish. As you know, USDJPY are negatively correlated. So if USDJPY is bullish, gold will be bearish. Okay, gold will be bearish. So let's start with the daily first. Let's see how yesterday candle closed. You can see yesterday candle was an engulfing, right? It engulfed this bottom. So this is a buy confirmation. Immediately this candlestick closed bullish yesterday, it confirmed buy. It confirmed buy. Now on the daily, you would see that a fair value gap was created at this point. Okay, so that will be the target for USD JPY. So if you are considering selling, patiently wait. If your bias for USD JPY is bearish, patiently wait for price to get to this gap, to fill this gap before you sell. Selling USD JPY current market price is at a very high risk. It's at a very high risk. Okay, flow with the trend. Don't trade against the trend. If you trade against the trend, you just keep struggling. Your stop losses would always be always go for your stop losses. Okay, so don't trade against the trend. Flow with the flow with the trend. Okay, flow with what? With the trend. So UJ is bullish at the moment. So let me revisit gold. Gold is bearish at the moment. Okay, gold is bearish at the moment. So let's see what's happening on 4 hours. So it's been in a range since the market opened. It has been in a range. Okay, it has been in a range. Mr. Raphael, have it. It has been in a range. Okay, so you might want to wait for a breakout. Right now, I think what they are doing is hunting for stop losses. That's what they are doing right now. They are hunting for stop losses. So you want to wait for maybe price to break out from this low before you sell. Okay, and like I did, I identified the fair value gap here. It is possible price will push up to fill this gap. So you either wait for price to pull back to fill the gap before you sell, or wait for a candle to close below this support before you sell. That will be my take. And if a candle closes below this support, you could set your stop loss maybe a few pips above the range. Okay, you can set your stop loss few pips above the range. Okay, so those are the two things that are likely going to play out on gold. Price pulling back to fill this fair value gap before selling, or a candle closes below this support. Now, when a candle closes below the support, all you need to do is go to lower time frame, 1 hour. Okay, if 4 hour candle closes below that level or that support, it's likely going to create a fair value gap. So identify those fair value gap on lower time frame, 1 hour, 15 minutes, 5 minutes. Okay, wait for price to fill that fair value gap before you sell. Okay, for example, on 1 hour now, you can see we had a breakout here on 1 hour. Can you see this candlestick closed below this support and the fair value gap was created? You can see the gap in between this and this, and I believe that gap has been filled. You can see that gap has been filled. Can you see the gap? The fair value gap was created here. And I think that is the reason for the pullback we are seeing in the market right now. This gap. You can see that gap has, let's go to 15 minutes. It'll be more clear on 15 minutes. So you can see at this point, you can see price has been in a range for some time. A lot of retail traders have executed sell. So what they've been doing so far was to clear the stop losses. They've been clearing stop losses at these highs. You can see. So they might still want to clear it also. There's a fair value gap here also. Can you see that? Can you see fair value gap? This fair value gap. Can you see? This fair value gap was created after that breakout. So if you want to take a trade now, your stop loss must be above these fair value gaps. 1, 2, 3. So your stop loss must be above this stop, because we know that there's a possibility for price to pull back and fill those gaps. So our stop loss must be above those gaps. I hope that is clear.
Yes, Mr. Kayode was asking the Canada sheep to analyze.
Which pair?
Canada sheep.
CAD CHF?
Yes.
CAD CHF, let me see. Okay, hold on. CAD CHF. Okay. CAD CHF, let me check. have that on my list. CAD CHF, CAD CHF, CAD CHF. Okay, let me add that to my list. Few minutes. Few minutes. CAD CHF. So that will be the last pair we'll be looking at if there are no questions. That will be the last pair. That will be the last pair we'll be looking at. Please, you have to check back. I'm busy. Check back, please. So CAD CHF. CAD CHF. Let's start with the daily. Okay. When you look at this chart, it's not looking nice at all. Okay, it's not looking nice at all. It's not looking nice at all. But if you look at what price has done in the past, the fact that the market is trading below the low of this candle, this bullish candle, you can see the market is trading below the low of this bullish candle. If I want to take any trade on CAD CHF, it will be a sell. It will be what? A sell. It will be a sell if I want to take any risk on CAD CHF. But let me start with the weekly. Let's see weekly. Okay, so on the weekly time frame, on the weekly time frame, you can see price has tested this low. Price, we had a resistance here. Price broke out from that resistance and there was a pullback. Okay, so could this be stop loss ons? Could it be? No. Sorry for that break. Sorry for that break. Could it be stop loss ons? Okay, so the pattern I have on CAD CHF is not too clear. But if I want to take any trade on CAD CHF, going by this weekly, because price tested this, you can see we had a support here. Okay, price tested that support and there was a strong rejection from that support and it closed above this resistance. Based on this weekly pattern, this is a bullish setup. Based on this weekly, this is a bullish setup. That's my take on CAD CHF. Though the chart is not clear, but if I want to take a risk based on what we have on the weekly, I might consider buying CAD CHF. I expect probably they want to clear liquidity at the previous high. Okay, so based on what we have on the chart right now, CAD CHF is bullish. Let me see 4 hour. Okay, so this is bullish at the moment. CAD CHF is bullish. Anything that makes price close above the high of this candle, anything that makes price close above the high of this candle, that would be a buy for CAD CHF. I'm in a class. What? I'm in a class. Okay, so that's it for CAD CHF. It is bullish at the moment. You can see what played out here. We had a fair value gap here. You can see we had a fair value gap here. You can see price pulled back to fill this gap. You can see this gap has filled. So there's a probability for it's buy for CAD CHF. It is buy for CAD CHF. So if I'm buying CAD CHF from the current, so that will be all for today's session. I appreciate you all for your participation. Please, as you trade, ensure that you apply stop loss. Be very conservative. Don't be aggressive. Ensure you use stop loss. Ensure you know risk involved in the trade before you execute the trade. Don't over leverage. If you over leverage, you will blow your account. The secret of successful trading is proper risk and money management. That is the key to successful trading. If you rush the market, you would crash. Your account will crash. If you rush the market, your account will crash. Take it easy on the market. And like I said, every trade you execute should align with your trading plan. Don't trade outside your trading plan. Okay? So appreciate you guys for your participation. In the next session, I would have a gift. Okay, there I will drop questions in the next session, and anyone, the first person to provide answers to those forex trading questions will get a gift from me. Okay, so thank you very much. I wish you guys a profitable trading day. See you in the next class. Our next session will be tomorrow by 10 a.m. Tomorrow is Thursday. By 10 a.m. we'll be meeting. Do have a wonderful day. Is there any question there?
No, welcome, Mr. Kayode. I was thanking you.
Thank you. Okay. All right. Thank you. All right. So that'll be all. Bye for now.